This is John from FMS. I'm here today with Ian Rosen. Ian is the CEO of Financial Answers, which is a fintech platform that partners with financial media companies to bring wealth and investment intelligence to investors. And Financial Answers is a division of Tifin, which a lot of you guys have heard about, I think, because they have been making quite a few acquisitions in the publishing space. And just to give you a little bit more background on Ian, while he's CEO of Financial Answers now, he was also, previous to this, he was the general manager of MarketWatch. And then he left and founded Even Financial. And then following that, he was CEO of Stock Twits. And I think you're also a mentor over at for FinTech at Techstars. Is that right?
That's true. Yeah.
So he's got a huge amount of experience dealing with the digital environment and the retail investor. And I'm really excited to have you here, Ian, because we've had so many great conversations, and I love your perspectives on the industry and the market. So thanks for joining us.
Yeah, thanks so much for having me. I agree. It's been great to be talking about this stuff.
Yeah, so just to give everyone kind of the 50,000-foot view on what you do at Financial Answers, would you just kind of map that out and then maybe put it in the context of Tifin more broadly, which has quite a few divisions?
Yeah, sure. So as you mentioned, John, my background is primarily as an operator. I mean, most people in the space know me from MarketWatch, and then I left to co-found Even Financial, which is a customer acquisition platform, working with publishers for acquiring users for financial products. And then I was CEO of Stock Twits, which is the largest social network for investing and trading. And during all this time, the thing that really started to develop for me is I'm looking at the financial services and fintech world, and I'm seeing products being easier and easier to build. Just, not that it's easy, but they're easier and easier to build certain products, even high margin products that are disrupting the space. And all of these products have the same challenges, which is, okay, now we've built something that's disruptive. How do we get users? And the way to solve for that problem typically has been to work with sources of traffic and leads and publishers, like most of our own companies and the companies that we work with. And I'm looking at, the hardest, if it's getting easier to build products, what's the hard thing? The hard thing is to have an organic source of traffic and users and engaged audiences and people that trust you. And those are things that take a lot of time to build. They take years to build. There are digital street corners that we've all worked very, very hard to create. And in the best case, in the base case of those properties, we're selling ads, and in the mid case, we're selling subscriptions, and the better case, we're doing affiliate deals. But in reality, the highest value of that audience is actually being captured by some of these other companies. And when I was at Stock Twits, we raised money and built a broker dealer specifically for that reason. But I think many companies just don't have the time or inclination or capital or skills to achieve that value. So what Financial Answers is all about is first helping investors connect to the right investment products and have the best outcomes and meet the right advisors and things like that. But secondarily, for the companies that are bringing them into the space, helping those companies achieve the best outcomes by maximizing the value of their audience. That we are doing the hard thing in a shorter sense. And Financial Answers is part of Tifin, as you mentioned, John. Tifin is a fintech with all the toys that financial media publishers want. We have broker dealer, we have RIA, we have thematic baskets partnered, built by us and Morningstar. All the things that allow an individual investor to continue seamlessly along their journey from where they're learning what to do with publishers and products like in our ecosystem, but then taking those actions and doing it in a healthy way while making the companies that are a part of the Financial Answers ecosystem significantly more valuable.
That's great. And so I want to focus on a few areas to start with, because I think these are the areas that are the most interesting and most pertinent to kind of the financial publishing and trader education world. And that's one is the area of the kind of the market context right now on the retail investor and the financial media companies and kind of where they fit within everything. And then two, and maybe we should just first, is just expound a little bit more on this idea of value capture of an investor, because we've seen this a lot already, where we have publishers, especially on the private market platform side, it's the most obvious, where you'll have a fintech platform that is, a marketplace for private deals, crowdfunding, Reg A. All of their traffic, all of their investment is coming because of a couple of publishers recommending deals on there, to the point where like they won't even cover some of the companies unless they can get a publishing partner. And so now you have these companies, these publishers who've spent a ton of money, because it costs a lot of money to acquire customers and leads and build that audience. And they're transferring this, like they're capturing subscription value in the publishing world. The Agora having their best year around 1.3 billion or whatever, it seems big, but in the financial world, I mean, I was joking, it's kind of like it's the pimple on the butt of the financial industry. It's not that big. So, but the customer is increasingly important, and the value that customer represents is dramatically more than simply subscription sales. And so you in particular have talked to me quite a bit, and obviously what you guys are doing is helping people transition that value. So, but could you expound on that issue of value capture within digital investment kind of media?
I think you said it exactly the right way. I think that for a lot of these high value platforms, the lifeblood of these platforms, the foundation of these platforms, is the most valuable commodity in the digital ecosystem today, which is attention. I mean, if we talk about like time on site and all the things, the metrics that we have for media, I mean, if you consider the fact that like we have a phone in our hands 24/7, and every minute of that time that is ours is unbelievably valuable. We are the lifeblood. Financial media is the lifeblood of all those other platforms. And I believe there's a mismatch. I think that the way these companies that own and capture the attention and time and trust of the users, that are the lifeblood for these incredibly high value other companies, is improperly valued, in the sense that you have revenue models that look like ads or subscriptions or affiliate, when in reality there's a giant arbitrage and mismatch between the hard part, which is what we're doing, we being financial media and publishers, and the much easier part of building a platform that leverages the users of those publishers. I just see this as a giant opportunity, and I know why it exists, and we all know why it exists. I can't tell you how many conversations I've had with my peers and other publishers where we say, we were thinking of building an RIA. We were going to partner with this financial advisory group, or I was going to build a broker dealer. But those things are very difficult. I mean, I did it. We did it at Stock. We raised $9 million. We built a broker dealer. It's hard, and it's a totally different set of skills. And I think that the right way to align that value capture for our community, who is doing, I'm going to keep saying it, the hard part, is to partner with companies like Financial Answers and Tifin, where we can put these things together. We can make both sides significantly more valuable.
And that's what, and you do have that, right? Because you have a lot of different groups, you have different platforms, you have access points where media companies and publishers, if they come into kind of come into the fold, they have the opportunity now to kind of, I don't know, not just they don't have to give up their subscription business. It's just now you add these other layers of the business, correct?
It's completely additive. That's exactly right. I mean, I think that when a lot of people are, acquiring in our space, and we've all been on both, or I've been on both sides of the table, but we've all been in these conversations where essentially there's some, acquirer who's doing some kind of roll up where they're saying, oh, this is great, I'm going to mash these things together, I'm going to combine costs, I'm going to combine ad tech stacks and make the numerator go up a little bit and flip it. That's not what this is at all. Because we believe that we are transforming or helping to transform the business models, we're looking for high quality founders, high quality audiences to come in, run. There's a tremendous amount of respect within the Financial Answers umbrella. We help each other. There are ways to work together, but in essence, the reason that we don't have to make those kinds of really tough choices is because we do have those other very high value tools. So on the Tifin side, we have a company called Magnify, which has an advisor component and a retail component. The retail component has a commission-free brokerage. It's all widgetized, highly usable, a lot of intelligence and ability to search. Magnify itself is a marketplace of investments. We partner with Morningstar to create our own thematic baskets of investments which you can invest in through Magnify. All these are things that are very difficult for the typical publisher to be able to yes, maybe they can provide access through a biz dev partnership. But what we can do is we can deeply integrate these tools and help our companies participate in those revenue models, which makes them not look so much like, financial media publishers from a valuation perspective, but look a lot more like companies that are helping to facilitate the real financial services value to get off that pimple on the butt and get into the main part of the
and just to be clear to all you guys listening, like, I mean, so obviously Ian's experience, you have this kind of, I don't know, premier executive experience within financial, but I mean, you guys are backed by some pretty serious folks as well. So like, this is like I feel like this is the start of like the really big money coming into the industry on our side in the publishing kind of trader education world, because I mean, I mean, like, you've raised quite a bit of money. You have so who are some of your partners? Who are some of the investors that have kind of backed you guys?
Yeah, so we actually, I don't know if we're the first, but we're certainly uniquely one of the companies that we did a series A, B, and C all in the same year, raised $100 million in just in 2021. The most recent public valuation was $447 million. JP Morgan, Morningstar, Broadridge, Hamilton Lane is our most recent investor. And they're all, what's interesting to me is when I speak with our investors and I speak with, other people in the sort of larger Tifin ecosystem, which, look, anyone can go to the Tifin website. We have a lot of people have been around a lot of blocks. Sharon French used to be president of AIG Asset Management, and Neil Aurora was the CEO of Yodlee, who took it public. I mean, Cathy Wood is on our board. Like, these are all folks that that have a significant amount of experience. What they're buying into is this idea that, and helping to create, is this idea that wealth management, particularly from the asset managers to the wealth managers to FAs and retail, that this is a process that has a huge numbers of friction still. It doesn't really look like the way we buy other products. The way we buy other products through Netflix and Amazon and everything else, there's a huge amount more personalization, reduction of friction. And Tifin is very much committed to building and buying and acquiring and investing in areas to reduce that friction. Financial Answers is a part of that story in the sense that the retail investor is at least half of the market. The retail investor is a source of a lot of the intelligence as to, like, every financial advisor, every asset manager, at the end of that road is an individual investor, a family, an individual. And Financial Answers, through our ability to aggregate audiences, to provide other tools, to look at the data around what our audiences are doing, that we can help reduce some of those frictions. And our large investors at Tifin they see that for what it is, which is a unique transformation of an entire sector, where we have a consumer data portal for the retail investor and an ontology around that simply hasn't existed before. That's what, people talk about, like, data is the new oil and all that. This is that. This does not exist in our industry, and we have the capital and the skills and the team to be able to make that true. And the companies that come with us at Financial Answers along the way are going to benefit. That's why we're so careful about who we want to bring in. I mean, look, there are a lot of unbelievable operators and actors in our space, and there's some people that maybe are not the right fit for us, but we're looking to work with people that we think are great and want to go on that road.
So I have a bunch of predictions / theses about our industry in the publishing world. And one of them is that we're basically entering this period where competition is traditionally in our space has really been, especially on like the FinPub trader education side, has really been for talent. Like, it's almost entirely for talent. Other than like recruiting, everybody works together and cross promotes and does things quite well. And the media we're not taking enough of the media pie in general that we're edging each other out. But I feel like we're moving into my prediction is that we're moving into a period where essentially we're moving to a business model and revenue model, business strategy, competition phase, where there are going to be new models that come up that are going to transform the subscription side of the business, because and I feel like you guys are a perfect example of that, because this additive element fundamentally changes the value of the customer. And so the publishers who work with you, the customers that they're acquiring are going to be the value to the business is going to be much higher than simply subscription sales.
Yeah.
And then that changes all of your acquisition math, which means scaling becomes a completely different game now.
Because we have right. I think that you're right. You're right that this is a fractured space. It's been that way for a long time. I think recently, for a variety of reasons that we've been talking about, there is an opportunity to combine forces and to create larger players that can bring more of these skills to bear. I mean, Tifin, we have, I don't know, I think like 350 people now, probably like 100 and change of them are pure development and data science. There are very few publishers, even very large publishers, that can bring that level of resource to bear on the kinds of problems we're talking about. So the value capture, to your point, when I look at companies that we want to work with, I don't think about, okay, what's your subscription? How's your subscription base going to grow? How are we going to squeeze an extra 5% out of that price? I think, what's the ultimate value of that audience to an asset manager? Mm-hmm. And how are we going to identify signals that are going to allow us to put that in place without disrupting the existing business? One of the really important parts of our business is that we need founders to, not need, but we want founders to stay. Like, we're looking to get great businesses where their founders are looking for that next step up. They're looking for that next way to amp their business up into the next level, both revenue wise and size wise. They're looking for partners to do that with. They enjoy doing what they're doing. And I can't tell you how many conversations I have with people where they're like, well, how do I know you're not going to, like, get rid of me in a year? I'm like, how do I know you're going to stay in a year? I will happily incent you to stay for 10 years, So I think we're unique in that space. But yeah, we don't look at, our math is different. It's more about, how do we bring the right people in, the right companies in, and together we're going to create a powerful force in our space with a good, fun, competent group of people that just like winning. I mean, the best part about this is that we get to go into these conversations and say, yeah, guess what? We have all the toys, all the capital, all the skills. I can get people on the phone that are going to open that door for you. We're going to get you onto these platforms that you couldn't get callbacks from. And yeah, look, you can look at my resume or the other Tifin people. I mean, we like to succeed.
Well, that's what the math piece is huge, because I remember you said this actually in one of our earlier calls, and I thought this was hilarious and so true. Is like, this world, you said that you teach your kids, this world rewards people who are good at math and punishes people who are bad at math.
That's fair. Right. That's right. And I think, and it doesn't serve anyone to have, like, we're all these companies, a great $3, $5, $8 million business, $10 million business, where, we have a bunch of people that are doing a lot of the same functions, are not able to invest in the things that we really want, are going to move the needle. Like, the reason I got into FA, and I think this goes back to your first question, and I wrote an article on this on LinkedIn, which anyone can look at. I was just, frankly, I am extremely annoyed and angry that the entire fintech ecosystem is essentially capitalizing on the back of something that has been carefully grown for years, for decades. This is the moment.
Yeah. Absolutely. And it is, it's frustrating. It's like, it's not just frustrating. In some cases, it's been just infuriating to see that the hardest part, the thing that, like, most of the guys who have and women who have these great publishing and media businesses have done, is like the hardest part. They've done it without, in most cases, even raising any capital. They bootstrapped a lot of these things, built these amazing businesses, and then the value just gets transferred out. In some cases, not even for advertising dollars, really just as part of the deliverable. And it's just like, it's insane to me. But like, and so just to step back, like,
you have like fintech companies that are like taking venture money at, ridiculous multiples and just shoveling it into a fire of Google and Facebook ads. This is an opportunity. I would say this is all wrong, and it is, but it's an opportunity for us.
Yeah. And so, like, that's what to people out there, publishers, and educators, and media groups out there who are interested in kind of the possibility of partnering and being acquired, whatever the actual deal looks like. I think like it'd be good to get your perspective, because you have come from kind of the fintech world. You've also worked with the MarketWatches and the Stock Twits, and you founded a company that, like, let's talk about the retail investor and what this opportunity really represents now in for all these media groups. Because if the opportunity that you as a company represent in kind of right now to our space is the opportunity to participate in all of these other areas. And so, like, that size of that market, the size and the importance of the retail market, like, let's talk about the retail investor and where that's kind of driving the rest of financial.
This is one of my favorite topics because like yourself, we got to like sort of watch this unfold for so many years. We were told that the retail investor doesn't matter and it's a tiny part of the market and all this stuff isn't like kind of relevant anyway. And then the world changed. I mean, and the reason the world changed is, first of all, technology has allowed much easier access into the kind of platforms that allow people to participate. So, I mean, when we were kids, or I think, similar generation, the ability to buy and sell, that was the moat. TD and Schwab and Fidelity, like, they had the ability to transact. So all the engagement tools were built around that, and financial media and education was kind of this thing off to the side. Well, okay, now the ability to transact is an API. Like the users at a Stock Twits or a MarketWatch or anyone else, they don't know from which platform is different. I mean, they should know because there are inherent differences, but the ability to transact is not the hard part. Having someone's attention and engagement and learning how to do something is the hard part, and that's where actually we all excel. So what's happened is you have this huge wealth transfer from boomers to millennials. Millennials are now aging into having money to invest, either by inheriting or growing and having their moving up in their careers and their jobs. I think in something that's fantastic, they are it's not just millennials. We all are more of a DIY culture now. Like, and I think that's what makes America great. It's like, like, we learn how to do something. Okay, we're gonna dive in. I might like to eat at restaurants, but I also want to learn how to cook. And by the way, once I start cooking, I'm going to critique your cooking. And I want to engage around those things and share my successes and share my challenges, and all those trends of DIY and technology and the move to mobile so you can do things more easily on your phone, I mean, have fundamentally changed the role, both the interest level and the role of the retail investor in the market. And I can't tell you how many conversations I've had in the last, I'd say, 3 years, where like some PE firm or somebody calls like, hey, let's want to understand this thing, because it's just bewildering, I think, to a lot of the institutional players that are out there, and that's a great thing. This is a retail wave of people learning how to take their financial destiny, the ability to trade, the ability to invest, personal finance, into their own hands. Even if that means their hands are now going to be more successful at picking the best financial advisor. Right. But in any case, being better educated is never a bad thing. And where transaction was the hard part before, now transaction is the easy part. The hard part is what we have been doing for decades: get people interested, get them engaged, teach them how to do things, help them take the next step. And if technology allows us to line up that education with actually taking the actions in the form of using broker dealers, like with Financial Answers and Tifin, or thematic baskets, or trading education, or all those different things, if we can line those things up, my strong belief is that in a wave of retail investing ascendancy, that if there's going to be value to accrue, that value should accrue to those that have the investors' interest best at heart. And that's this community, not I stood up a baby broker using, I'm not going to name names, but using a clearing firm, and put a hot skin on it, and I raised a bunch of capital, and now I'm trying to buy users at $400 a user. That's not the answer. The answer is for us to take that power, and yes, it's true for the sort of good of humanity, but it also is something that's going to be extremely lucrative for whichever side wins, which is going to be ours.
Yeah, and I love that, because you're right. Like we always joke that what we sell basically is we arbitrage engagement, sure. and it's true. But then, like, the fact is that the superpower of the financial media or investment newsletter or trader educator is that to find and engage an investor or trader, engage your attention. And then the subscription model, it's just a revenue model that's put on the back end. That could be anything.
Yeah.
And
because that's the thing, like we all look at like the arbitrage, like, okay, like customer acquisition costs, like let's say I can get a user for $2 and I can get a subscription and the LTV of that is, $150. We're all like, oh my God, that's amazing. But what's the value of that user? It's probably thousands of dollars. You have to extend the metaphor to the right set of products.
yeah, I had a slide in my presentation at FMS about like what's the value of your list. And I was like, look at the average US investor has something like $267,000 in savings. And so if you have 6 million names, that's what 26 billion in change in investable capital that's sitting there, and you have their attention. And I don't care who you are, there's probably not 5 people in your life whose investment opinion matters to you, but the guy you're paying, that guy's opinion matters to you for whatever reason, like you're listening.
This is what my old boss many years ago used to call being in violent agreement. I violently agree with that statement.
And so this is great. Like we could talk about this all day because we have talked quite a bit in the past year about like the trends in the retail space. But for everybody listening, like I do think that what Ian's doing is one of the few ways right now that anybody who has a media and publishing business can actually ascend up, like you said, into these other opportunities and a partnership that just opens up doors. So with that said, I know you've been acquiring, you've been partnering, you've been acquiring in the space. Could you talk a little bit about that, what your view on that, what you're looking for, who you kind of are working with, and yeah, just give us a rundown.
Well, yeah. So the first thing is that, like, for the reason I said before, like we're not like a typical company that's acquiring and mashing things together and pushing spreadsheets together. So for that reason, we actually have a little bit different and higher set of qualities. Like we're actually looking for high quality founders that have great businesses and great audiences that we want to continue to work with. I mean, we have a great group of people, and we want to work with people that are excited and building and are ready for that next step and are just generally sort of creative and excited and built things. So that's in terms of the people. In terms of the companies, I mean, we obviously, like, retail is more important than institutional, although there are a couple that have certain sort of blends. I think we used to have more of a bias towards like sites versus newsletters, but I think that's changed actually, because the way, like, email lists, to your point, John, like it's a different model. We can do all kinds of different things with, so it doesn't particularly matter to us. What matters is that the audience size is significant, that the quality of the audience and the quality of the list, like we're very much attuned to being on the right side of doing what's best for our users, and anyone we would work with or acquire is going to be well known in our industry or known in our industry for doing that, and we dig into that fair amount, not least of which because our investors are very, very concerned about making sure that we partner with the right kinds of companies. In terms of size, we look at revenue ranges anywhere from like $1 million to let's say 15 million would be probably a big swallow for us, but there's nothing really specifically off the table. Just that I like to work with smaller companies and founders as opposed to bigger behemoths. We need companies to be profitable already. We're not looking to do turnarounds or fix it. So things that either have or could have on day one, 20+% margin, including with the founder being there. But that said, like, we don't do things really bespoke, but we're also not like, we're not TCG. We're just a group of folks just looking to grab the right people together. We're going to do another, I'd say, 10 deals this year. We did 4 in our first half of, we started basically in May of 21, and we did 4 deals before December. So I think we're going to accelerate a little bit.
Nice. So so for everyone out there, then, like, you're looking to do 10 more deals, acquire companies in the $1 to $15 million range.
In 22, we'll do more than
over the next year, over the next 12 months. And so obviously, like, you're open to taking calls from anybody who wants an introduction to Ian. Like, just hit me up. You have my address, or text me for those of you who have my number. I'm happy to make an introduction. I'm really excited about what Tifin is doing and what you guys are doing. And so I'm going to be working with you guys to just try and like find companies to help join this group, because there are, I mean, for most of the other people in the space that I've talked to, and I've talked to a lot of guys now who are trying to figure out things like the broker dealer and publishing model, trying to figure out platforms and all this stuff. I haven't seen anybody who is already operating, already has the infrastructure that you have, already has all this opportunity that you guys have. I think that like you do, right? You represent kind of the premier opportunity, I think, for publishers in that range to participate in kind of what is probably the biggest trend to hit our industry.
I agree with that, and frankly, reciprocally, I think you're one of the smarter people that I talk to in this industry, and I'm excited to hopefully do more with you. I think, look, this is an opportunity for all of us to, you want to transform things, you want to, you know, take that next step, build up, work with super smart people, be creative. Like this is my dream job to be doing what I'm doing right now, honest to God. And I tell Vinay that all the time. So I think that to have the intersection of financial media, financial services, and technology, it's a tough little corner, but it's the best corner for us right now. And that's where we sit.
That's awesome. Well, I appreciate you taking the time to do this. And I think everyone out there, like I said, you're going to be hearing a lot more from Ian and from Financial Answers and Tifin over the next 12 months. The rumor mill is already, like, you can hear it, like when somebody gets acquired, it's like it goes like wildfire through the back channel. And so I've been hearing your name popping up all over the place, and I'm really excited to kind of see where this goes.
A VC once said to me when I was raising for my first company, he said, "Look, this is the T-shirt that you want. Like, this is the T-shirt that you want." And that's how I want to make sure that we're the T-shirt that people want. And so.
Oh, that's great. All right, Ian. Well, this was awesome. I appreciate it. And thanks very much for doing this.
Yeah, thanks, John. I appreciate it.